Keynesian economics has driven whatever we're supposedly think in this world. You spend money and you juice the economy. But as you can see that in '09, the debt increased by 1.47 trillion, GDP was down. So far this year, we'll probably take on another $1.5 trillion, and GDP arguably might be up 463 billion, although that number seems to be getting tempered by the day. And you have to ask yourself, well, what is GDP? That's like the sales line in an income statement. That's not profit. But you know what? The debt's a debt. It's not disappearing. So maybe somebody made some money on GDP, but we all got the $1.5 trillion of debt left over. And again, Bud's gone through this, and I would argue when I sum up all the things that the U.S. government has done, and it's not just the U.S. government, it's the Canadian government, the UK government, the Japanese government, we get nothing for our money. There's a chart here. Here's our unemployment rate. What do we get for all the money we spent? Unemployment's not changed. New home sales, and I like doing these charts that go back even further. If I took that back to 2000, the new home sales were something like 1.6 million, and today they're 275,000. And car sales were pushing 20 million, and today they're 11 million. And to be fair, if we just said, well, let's look at what we've done from 2000 to 2010, what would you call that? You would call that a depression. You would just call it a depression. That housing is something like 12.5% of what it used to be in car sales, or 60% of what they used to be in supposedly a progressive situation. Well, gold is a currency. I mean, every day we have to listen to this blather on TV about whether the euro is strong versus the US dollar and the yen versus this and that versus something else. And it's absolute blather. The only thing that's gone up is the real currency's gone up, and it's gone up an average of whatever percent you want to use there, depending on what currency. These are stunning percentage increases in an 11-year period. Stunning. And it gets even, we're almost getting a little bit stratospheric here, because these numbers, as the gold and silver price keeps going up, the percentage difference starts to skyrocket here. To think that the price of gold moved 35 cents on Friday, 35. Well, we all remember when gold was about, I don't know what the absolute low was, but it was 350 or 450, not that, 10 years ago. Oh my God, 35 cents on 450. That's an 8% move right there in one day. So these advances are becoming more and more significant all the time. And lots of people say that gold is in some kind of bubble here. But this data point, which might be a little out of date, like maybe it's not 0.8% of people's portfolio. Now, obviously here it's a hell of a lot more than 0.8. Might be 1.5, but 1.5 is hardly a significant figure when it's been the investment of the decade. I mean, that's not a big amount. And plus the fact it should have gone from that to 1.5, just on appreciation, no less. So there's not that many people committed to gold. Well, I am speaking to the committed, obviously. Okay, silver. And Bud kind of went to this, and I'm just desperate to talk about silver. And that chart's probably a little tough to read, but this is what GFMS, I think, puts out and says that aggregate investment demand over 9 years was 293 million ounces. Now, we happen to be a big owner of silver in our various funds. In fact, it's our biggest investment. Maybe I'll just divert for 1 second speaking about the biggest investment, because I have lots of investors that come from around the world. And one of the things that I do successfully is I focus in on things. And I get deep into things that I like, and I don't worry about diversification, which I think it's described to Warren Buffett. He describes it as diversification. And I don't believe in diversification. I believe in, if you think that's where you go there. And so, for example, in our long side of our funds, we're well through 70% involved in the precious metals area. And it doesn't bother me to have that percent. For me, I'm probably 70 or 80% in gold. It doesn't bother me. I just know that that's the place you got to be. Back to the supply and demand. Here we have that. So they show that there's 293 million ounces of silver has been bought by investors. And because I know what we've bought, and because I follow other people who sell silver, we questioned that data. And here's what we found out when, this is our own information, when we went to only, I think there's 7 different people there. The iShow Silver Trust, Central Fund, Zurich Bank, us, ourselves, the UK ETFs, Gold Money, which is a company run by James Turk, probably a lot of you are aware of it, and Claymore, which is also getting, we come up with silver holdings of 519 million, which is more than what the GFMS data shows. That's just 7 people. Imagine if they counted you guys, who all own silver too, which obviously they haven't. So the fact is that I think the data on silver have been very, very misstated, as I believe the data on gold have always been misstated. And it's funny, as I was listening to Bud, I've been a student of the gold market, and I got into the gold business when I read the 1998 gold book by Frank Veneroso. Big book. I was kind of worried about the market, and this book came out, and the book said, you know, the 32,000 tons that the central banks own, they probably only own 16,000 tons then. And I kind of bought into it. And of course, now we've gone 11 years since then at about 400 tons, or 400 to 500 tons a month. So those cupboards are got to be getting pretty skinny. You know, some of those guys looking in the cupboards now, like all the guys signed up to the WAG agreement, they're not selling anymore. They don't sell an ounce anymore. And I think that various parties have had to step in to breach the non-selling by the normal banks, and we saw the IMF agree to sell 400 tons this year, of which they have 88 left, and it will go fast. We saw the BIS come in and swap, I think it was 320 tons of gold about 2 months ago. There was a rumor that some of the purchases in London demanded physical gold, and there was a shortage of gold. So it can happen in gold, and one of the statistics that I fully agree with that Bud had up there is the availability of gold versus silver. And I use a number of $6 trillion, the amount of gold that's available in the world. And the amount of silver that's available in the world is about $20 billion, 22 billion. There might be 1 billion ounces of silver at $22, 22 billion, of which the ETFs already own half. And between you guys and us, we probably own the other half. Means there's nothing left.